Morning all, how are we doing? Morning. How's everybody this bright, shiny morning? New Zealand dollar's moving. Everything's moving. Big day. Can't even see it, look. Oh, where's my pen gone? It's like huge collapse on the New Zealand dollar. They did not like that news at all, did they, this morning? Big move down. Even little gap, look, all New Zealand dollar pairs. So we'll have a look at all these in a minute. I'm not quite sure exactly why. They obviously priced this in wrong, I guess, and they've had to scale out, same as they did with the euro, but we'll have a look at it in a minute. How is everybody? Morning, Dreska. Morning, Neo, Danny, Martin, Johannes. Morning all. Back from honeymoon in the Maldives. Very nice. Hopefully you got a tan. Morning, Tammy, John. Isidro, morning. Sarah, David, having issues with my Forex factory this morning. Are you? Can't see any issues with anything. But that's just me. Morning, I hate morning. Good one. Morning, Tech. Morning, Virginia, John, everybody else. Morning, everybody. I can't say morning to everybody because I'll be here all morning and we won't actually do anything. My Forex funds, yeah. Okay. Sorry, right. Okay, let's have a quick look at... What should we look first? First of all, that's weird. Completely flat. No trades on. So only had New Zealand dollar exposure on yesterday and New Zealand dollars paid out. So I'm flat. So looking at the results from yesterday, this is the ADR reversal strategy. 1.82% in drawdown at the moment. There's a New Zealand on and an Aussie on, two Aussies on, and obviously Aussie and New Zealand both done that. And they're all longs. So those are the two main things that have got the drawdown at the moment, the Australians and the Aussies. But banked 1.49% yesterday, 0.36 banked this morning, sitting on 11% now for the month on the ADR reversal strategy. H1 hedging is flat, 21% on the month, 0.26 banked yesterday, 0.83 banked this morning. As I said, the had New Zealand dollar Swiss and Euro New Zealand on the H1 M5 mean reversions, and they obviously both banked today. So yeah, flat on that. No exposure on. Need some risk on, otherwise can't make any money. 2.67 drawdown on H4 mean reversion, RSI mean reversion with M5 entries. 0.65 banked yesterday, 1.34 banked so far this morning, 16% for the month on that. And hedging, 0.74 banked yesterday, 2.5%, 2.45% banked this morning, sitting on 26.5% for the month, 8.7% of drawdown. So still, the main culprit is this Euro US dollar. We've also now got Aussie dollar, US dollar joining it. So it's the US dollar that's really letting the side down with the hedging at the moment, mainly because obviously it's got mostly exposure short and the US is rallying a little bit. So yeah, big money across the board. Still nothing in drawdown really of any worry at all. H4 has got 1.46 on US dollar yen. So we're just waiting for some yen strength or US dollar weakness really, but so that's the results from yesterday. This morning, obviously, we've had the 5.5 interest rate increase on the New Zealand. We'll have a look at that in a minute after the market opens, but obviously that has come out as expected. The press conference was pretty hawkish, pretty bullish, looking at potential increased rate rises moving forward. We've just had the inflation figures for the pound. As I suspected, we didn't get that. There's just no way that it's going down 2%. 8.7, so progress. We've made progress, but still not the progress we wanted. So bullish pound, basically, because that obviously interest rates are based on inflation. as inflation goes up, interest rates have to go up. Interest rates make currencies bullish. With the CPI figures not getting down to what they wanted, it puts more pressure on interest rate rises, which is bullish. So that's why that figure is green, although it is good because inflation's coming down, and we all want inflation to come down because it makes everybody richer. However, it's not good for currency values. We got the German IFO business climate at 9 o'clock this morning. That's an hour after market open. Doesn't tend to do an awful lot. I don't think the market's going to hang around for that this morning, so we should be fine for normal opening range breakouts. 10:30, we've got Bailey speaking, and again at 2 o'clock this afternoon. We've got Yellen speaking this afternoon as well, and then we've got FOMC this evening. That is not a rate rise or announcement. It is not a press conference. It is just the meeting minutes. Kind of leaked most of that a lot of the time before it comes out, so we get a whipsaw off it often, but sometimes it's just flat and does nothing. So that's today's news. We've got 2 minutes to the open. I'm just going to whiz through what happened yesterday overnight in the news. Nagel interest rates, several interest rate hikes are still needed. Bullish euro, saying we are going to continue to hike rates. So more bullishness for the euro. There. Only other news is New Zealand. The 5.5 interest rate rise. Inflation is likely to continue to fall from its peak. That's good, which means it takes the pressure off of interest rates. However, what he came out and said afterwards is higher rates are still required to attain inflation targets. So that says one of two things for New Zealand. And I think what the market has read it as is the latter. We are needing to hike rates more to keep on top of inflation, or we need to keep high rates, which means not changing them to keep on top of inflation. So this could mean either we are at terminal rate or we need to do more. Debatable as to which that one means. So difficult to tell, really. We've got some more news just coming, but we need to look at the market because we were about to open DAX. We've got gap fill on the DAX. So we'll pick apart the New Zealand dollar in a minute when we've watched the open. Right, 4 seconds. So potential gap fill opportunity. There's your pre-market opening range. We've got roughly 35 points to the upside. It's broken south. So let's have a look at where we're potentially off to today. So we've just completed the gap fill on the DAX, and we've returned to origin on that breakout. So this is a key level. This is previous support we're at here. So this high and last week's high, which is there. So when we pushed up into this range basically and sat there for 2 weeks, that was the high point of the range. Then we came back down and sat there for another week. Then we came up and tested that high again, came back down, tested it, sat down there for another 2-3 weeks, a couple of weeks. And then we finally accumulated at it and bang, we got the break. So that propulsion gap fill is done. So this is either the bounce point for the next leg, this propulsion gap, or this is, as I was discussing yesterday, a price discovery failure, in which case then we will pull back into balance and then we will attempt price discovery to the downside. So watch this like a hawk today. This is potentially a really good long opportunity from here, because if this is going to be a break and we are now going to continue in this bullish move on the DAX, I would expect this to hold and start a new leg, because we sat here for such a long time. This was weeks we sat here for. Let's have a look at how long it was. I mean, we got up into that area around there, which was the 13th of April. We broke out on the 17th of May. So we sat there for an entire month in balance, not really wanting to do anything. And this break was substantial. This break was the size of the range. So that's a strong move. And it was, the problem with it is, that move was straight up into the 2021 high. 2021? Can't remember. Was it? 2020, yeah. Yeah, 2021 November high. So we bounced straight up into that. You can't see it, can you? Can't even show you it. There. So my data only goes back to here for some reason. So that's the 2021 high there, basically. We double topped it. That's where we've bounced. So we're stuck. So there's two potential forces at play here. A double top bounce and rejection for a new leg down, or first test, and then we're going to either form a range or go for the break on that high. So this is a really key area today that we're at. So these two black lines here are the previous week's high and last week's high, which is the form of where the breakout started. So doesn't look like we got much limit triggers here at all, does it? We're not bouncing off of this with any vigor at all. So maybe we are coming back down today. We'll see. But your pre-market break is to the south. You are in short. Morning, it's time. Morning, Amar, Michael, everybody. Pound New Zealand near supply area. Don't do supply and demand. Support and resistance, it's called. We'll have a look at that in a minute because we're looking at all the New Zealand dollar pairs in a minute because they're all absolutely crazy ADRs and RSIs, obviously. Is the H4 set file also set to RSI levels 75.25? No, that's set to 70.30. Why am I looking at the Dow? Sorry, DAX. Wrong instrument. Morning, Luke. Pound yen. We'll have a look at that. We'll have a look at all the FX pairs in a minute after the open. Any thoughts on the H4 US dollar CAD? I'm long at the moment. Good for you. A couple of hours there. Whoops. Didn't want to do that. Screwed that up. I mean, basically, this could go absolutely anyway, couldn't it? It's an ascending wedge, so I would expect it to break to the upside. Come and retest that high ADR propulsion gap. So it looks like we're heading up to here. So I'd watch that for a target. Watch ADR for a target today. Okay, so there's your 5-minute opening range. Right on top of the potential support area. So we'll see what happens here. This doesn't look like this is holding at all, does it? So this looks to me like we are honoring this 2021 high, which was that double top from back there. We came straight up into it, slammed straight out of it, and it's coming down pretty hard and fast. So we'll see, but there's no limit. What I was expecting to see was a load of limit orders trigger. So us bat into this area and just like not get through it and slam off. So saying that, this could be the candle, couldn't it? So we'll see. So if you took the opening range break on the 15-minute today, did you get 1.5? You didn't. Got. He did, yeah. So target hit to the downside, 1.5 R, very nicely. In fact, you pretty much got 2 R out of it. So, nice break to the downside. If you took the 5-minute, even better. You're looking at roughly 3 R to the downside. The new EA that the variation on the opening range breakout EA that I've been testing. I did a load of testing overnight on difference between trailing stops and no trailing stops. Really interesting results. Trailing stops are just pointless. Throw them away. I've got proof. I've always had proof, but I've got proof of this strategy, trailing stops. Chuck them, no good. But yeah, some very big results. This is 1 year testing, 100K return off of a 22K drawdown. And it all about 150 R. So 1.5 R is the focus point. You can see all of these using 1.5 R as the initial target, and then a longer term trade, a sort of runner, if you like. Anything bigger than 5 R starts to kind of fail a little bit. So I've tested up to 5R as a second entry. So the idea being we take 2 entries on the opening range break. One of them is 1.5R. Thank you very much. The second one is somewhere between 2R to 5R. All return positive result. I think it's 235 tests it did. No. 84. All right. Oh, have I got them filtered? Hold on a minute. Filter in place. 242. $700 runs. Right. I will go through that in a minute anyway. I'll show you the results on that. Right. So we continue into the south. So we are breaking to the downside. So this makes the downside target very difficult today. If this is a price discovery failure, we're going to return to balance. Where you return to balance is anywhere in that range. So we'll see. Not necessarily yet confirmed, obviously. We will need to wait for the day to finish. But there's a lot of areas here, as you can see on these wicks, where we might find support here. So it could still bounce back out of this area. If it does bounce out of this area and we finish bullish today, I think we're going to run to the upside. So we'll see. But yeah, certainly doesn't seem to want to go long at the moment, does it? So there's your opening range break, 5 minutes. 5-minute break is short as well. However, I'd be worried about this little gap fill, to be honest. I'd rather come up and see that finished. It might come up and do it later, but we'll see. Right, so let's go through the FX pairs. Tech. I rented the range breakout EA for 1 month to test it. Cool. Just seeing where that's... we got this propulsion. So this candle here is the real start. That's the break candle. That's what started that move. Then obviously it accelerated there. So this propulsion gap, if this is going to be, think about the banks and what the banks are doing out of this accumulation. They have started a rally long. Yeah. If they really want this to go long, they need to buy up where they broke. This is where they broke. This is where I would expect, if this is going to be a successful breakout move, this is where I'd expect the buyers to really step in, which is why I was kind of thinking the limit orders might trigger at the lows there, but we haven't. So watch this area for a rally. Right. Just quickly going back to the news, because we had some more news coming this morning I just need to look at. CPI, we know about. Core CPI rate is at its highest since March 1992. UK financial markets price a 100% chance of Bank of England rate hike in June. Again, massively bullish euro, massively bullish pound. Fully pricing the bank rate to 5.25 by the end of 2023. We are currently sitting at 4.5, so there's a 0.75 rate hike factored in. Oh, 5.5. Sorry, that's 1% rate hike factored in. That's traders. Well, so basically both of these are saying the same thing. That's potential terminal rate, 5.25 or 5.5, so somewhere around there. 80% chance of a 5.5 peak. Right. Okay. Read it, Lee. Okay, so bullish on US. So let's have a quick look at how that's affected the fundamentals, because we've had 2 big news events on 2 major fundamentals. So New Zealand dollar, starting with that. We are now the highest interest rate of all currencies, 5.5, overtaken the US dollar. So the inflation figure in New Zealand is currently sitting at 6.7, which is just shy of the Aussie and the Euro, which are the second worst, which basically are the worst apart from the UK. So as this is coming down at a decent rate, target is always around about 2%. 2% is what most of the central banks and governments want your inflation levels to be at. So it is coming down. There's a long way to go, obviously, but it's coming down at a fairly decent rate. Their unemployment is stuck, which is good. It's be better if it was coming down, but the fact that it's not going up is good because it allows them to increase this further. So what the New Zealanders said overnight was interest rates need to remain high to get on top of inflation. They haven't confirmed whether it is going to be more hikes or whether it's keeping that as the terminal rate. So undecided. I think that's why the market has had a little bit of a flap about it and dropped. I think they were possibly expecting a little bit more, and we got the hike, and obviously they dropped on the hike. From the press conference, all we did was grind down. So there was nothing in the press conference that said we should be buying the New Zealand dollar. So I don't think that this is necessarily bullish or bearish at the moment. However, I don't think that the New Zealand dollar drop of that speed is warranted. Yeah, they knew we were getting 5.5. They factored in 5.5. There's no reason for them to do that. But they did it with the euro as well. We had the euro come out as expected, and we've had nothing but bullish comments about the euro, and that's obviously come down as well. So I think this is just a pullback, basically. And I think we'll probably get a return to origin on this at some point. So I like the look of all these New Zealands at the moment. The other news we've had, obviously, is on the pound. That's not updated. Yeah, it's updated. So 8.7 now, quarterly. That's a 1.4 drop. Big drop. So we are now factoring in 5.5 as our terminal rate. So the fact that there's another 1% to go on interest rates, and the fact that our unemployment is coming up, I would be hard pushed to find us to get to 5.5. 5.25 maybe, but the fact that this is starting to rise puts the pressure on them not doing that. The fact that this is coming down so fast means that if it continues to come down at this speed, you really need to take your foot off the gas. Otherwise, you're going to overshoot and get deflation, which you definitely do not want. So it's difficult to know what's happening with the pound. But the fact that they've come out and said we have got more rate rises coming, and it's pretty much 100% factored in at 0.75, 80% factored in at 5.5, means we should be looking for longs on the pound. So the euro is bullish, the pound is bullish. The New Zealand dollar, not sure. But if it's not going to be bullish, I would say it's probably going to be a little sideways. A little bit like the US dollar. We think we've hit terminal rate on the US dollar. So it's just not rallying hard. It's not really dropping hard. It's just kind of doing its thing. New Zealand should do the same thing as well. So difficult to tell really with New Zealand yet. We need to just wait and see what the market does over the next couple of days. But that's definitely not bullish, definitely not bearish, kind of in the middle. But I'd say it's a little bit more bullish than bearish. But I don't know. Just very, very difficult. It's always the same with all this news. It can always be interpreted in multiple ways. So it's how you decide to interpret it and how the market decides to interpret it. And this is why we follow COT. And we look at what the market is doing. If the COT figures in 2 weeks' time suddenly flip on the New Zealand dollar, we know we want to be going in a certain direction on it. But at the moment, if you look at all the New Zealand dollar pairs, they're all kind of in the middle. The only thing that's bearish is obviously the New Zealand US, which is always going to be bearish, but that is going to change. So that COT could quite possibly change and bring this back range bound as well. So difficult to tell with that one, but the pounds I think we're still bullish on. So that's the news. Obviously, if we have a look at what's happened to the market, we are still dropping short. There's your 15-minute opening range as well, the blue line. So you're broken out to the south on the 15-minute as well. It's certainly not holding up the DAX. So watch this gap fill. But looks like we are headed south. Let's see what the euro's up to. Yeah, big bullish euro. So nice bullish euro. especially Euro New Zealand. So yeah, negative indices. Right, ADRs. So there's lots of ADRs to look at. Obviously, the vast majority of these are Australasian based. Well, they're all Australasian based today. So Aussie dollar, New Zealand dollar. Start off with them. So this is obviously the propulsion gap. They're all the propulsion gaps from hell. If you go and look at propulsion gaps in the past, you don't often get big ones like this. When you get a big one like this, it's a fundamental shift. Typically, it's a move which is way more unexpected than we were expecting to get. Now, the problem with it is obviously we don't know whether this is an overreaction by the banks or whether it's something that is going to continue. So we won't know until the market sort of plays itself out for a couple of days. But what we quite often find with them when they're this big is you will find that they will just fade and you get that sort of movement into them. And then we get the rally, or it just fades through it and then collapses back out on a breakout on the opposite side. So we'll see what happens. But I really like all these as shorts. So looking at these, obviously, from an ADR perspective, they are off the scale. We're up in the 225 pluses. So this is, you know, the odds, the percentages on these is 2%. We get above 225 ADR around about 2% of the year. You know, it's a handful of times it actually moves this far, and it's always on some kind of fundamental. So good opportunities for shorts, but wait for the reversal alerts. So wait until you get some kind of structure break. Wait for the market to have some sellers start to kick in. Everybody that is long on this and holding at the moment is in a lot of profit. There's been no reason to hit that sell button and get out of those trades yet. As soon as you see people starting to get out of those trades, everybody will see their P&Ls coming down. They will then hit the sell button to get out of their buys. That will make everybody else's P&Ls come down faster, and you tend to get that movement very, very quickly back down. Say very quickly on a move like this, you could be talking 2 or 3 days, obviously. But so they're all good mean reversion opportunities. If they don't mean revert and we literally get that kind of accumulation push, obviously we've got resistance coming up on it where you would look to get and scale in. But like everything, the odds are the same. If you go short on this, it's either going to go short or it's going to go long. If it goes long, you're going to deal with it. But I don't think there was nothing said yesterday that says the New Zealand dollar should be collapsing by 3 times its normal average daily range and continuing to go in that direction. It's not bullish. It's not bearish. It's nothing. It's just what we were expecting. So I don't think there's any reason why we shouldn't see these mean revert at least 50% of the move. At least if we just come back in and tap. I'm just trying to find an example of a previous one where we fill it by half. There you go there. So you can't really see it because of the moving averages. So what we quite often get, as you can see here, when you get a big propulsion gap, a lot of the time on these big ones, it fills it by 50% on its first attempt. Reason being is this is a strong market movement. So there are participants in short here in this example. When you push back into that area, these participants that are short defend that area and push it back out again. So you don't get the gap fill on the first attempt, especially with the big ones. You quite often find they are a 50% fill, which is why you'll see me every now and again sticking my TPs at 50% of a propulsion gap, because it's quite common for them to bounce out of 50%. So on a propulsion gap that size, you know, if we're mucking about here for a bit, we could come down into there and then they'll rebuy on this move and you'll get half of it filled. So it's a 50% retracement on the move. So that's what I would kind of look at as kind of your safety scenario, if you like. So if you're worried about them, there's every possibility it's just going to completely fill it and return to origin, but that's your safe trade, if you like. So Aussie, New Zealand, again, you know, drop down, wait for reversal alerts. Euro odd is extended. That's just hit the 100. That's still going. Again, there you go. Prime example. Why didn't I do it that one? Big propulsion gap. That's where we started buying from. Sellers try to take back control. Buyers go, nope, this is where we're buying from. Off we go. Yeah. Also happens to be previous resistance turn support. So euro odd, good opportunity for shorts. Obviously, with the euro, we are looking potentially for longs. But obviously, the Australian dollar will power up with the New Zealand dollar. And if the New Zealand dollar is going to retrace all of these downward movements, Aussie will power up with it. And obviously, that will come down. It depends who's the stronger of the two. News-wise, coming up, we got US dollar news tomorrow and Friday. So there's no pound, there's no euro news, there's no Australia, there's no New Zealand news. So it's literally all US dollar for the rest of the week. So there's no news catalysts to drive this one at all. So wait for the reversal alert on it. M5, obviously looking for around about a third of an ADR to a half of an ADR profit target on ADR reversals. Euro New Zealand, obviously that gapped up there, but same thing, wait for a reversal alert. We are above 225 ADR. You can see all the ADR lines have crossed, which tells you you're over 200%. So yeah, just waiting on this. We've just hit a resistance on it by the looks of things. Yeah, so previous week's high and last week and 2 week ago high, and that propulsion gap. So possibly going to see some sellers step in there. We've got a nice potential support there, double bottom, which could well turn into resistance on the way. And obviously we've got that weak accumulation there with propulsion gaps in it as well. So go for half. Pound odd, again, same thing, propulsion gap target coming up. This one's already come off of 150 ADR. So New Zealand dollar yen has just hit 175. We haven't had the reversal alert on this yet. And again, on some of these, if you're trading with EA, obviously it's all automatic. But if you're trading manually with these, you know, have a scan through them all and monitor them all and look at where the reversal alerts actually are. Some of these are going to be tighter and better to get into than others, especially if you're using a stop loss strategy with them. There's a long way to go there, basically, to get back down to the reversal alert. So yeah, basically good reversal opportunities on all of these, isn't there? So pound odd, that's 150, is it? Yeah, 150 ADR. Wait for the alert. Wait until you've got some kind of breaker structure. Pound CAD, just had the reversal alert on that one, so that one will already be in a short. Is that one extended on RSI yet? That's a nice level that's coming out of as well. So 2 week ago's low, yeah, retested it, dropped, retested it, retesting it again. Propulsion gap going in there as well. However, we've got that propulsion gap there, which we've tapped into, which they've rejected out of. So stuck on that one at the minute, but you have got the reverse alert, pound CAD. So that's 125 ADR short. Looking for roughly a third of an ADR, which is somewhere around about 30 points to the downside. So basically it's that propulsion gap. That's just over a third of an ADR as your target. Pound Swiss also extended. Missed that. That's awful. So this is what I mean by some of these are going to be better than others. Look at the reversal alert on that. Yeah. It's pretty much half an ADR before you even got a trigger to go short on it. Not the greatest reversal alert in the world, is it? But it's coming down hard. So pound New Zealand, that's a massive one, obviously, the New Zealand dollar. So we've had pound news, which has driven the pound high. We've had the New Zealand dollar news, which has tanked the New Zealand. So the pound New Zealand is the ultimate at the moment. So that is 458 pips. So 460 pips on an ADR of 140. So yeah, big move there. So wait for the alert to go short on it. Somewhere in here, if you want to hold it, is your target. But do bear in mind that there is a possibility that they will tank the New Zealand dollar for a few days. It could well happen. This is a much bigger reaction than I was expecting off of an expected interest rate rise. So look what happened to the euro. So last Thursday before last, there, yeah. So we had 1, 2, 3, 4, 4-ish days of drop. Yeah, that was an expected increase in interest rates. Tanked for 4 days. It's bullish. So the markets will do what the markets needs to do based on their books, not on necessarily the outcome of the news. So they are bullish on it. They know it's going to go up. They know interest rates are going to go up. They know there's more to do. However, it doesn't mean that right now they are balanced to go long to make money. If they're balanced to go short to make money because they've overshot, they'll drop it. That's probably what is happening with New Zealand at the moment. So we might find we get into, so don't get into aggressive on it, basically. So that's pound New Zealand. New Zealand dollar CAD, so all the New Zealands obviously are extended. New Zealand dollar CAD is now at 200 ADR. Not quite. Just tapped it and missed it. Missed it by 3 pipettes. You've just had the reverse alert on that. So you can see I've just gone long. That's the first long entry. That's an H1 RSI extension M5 reversal alert entry. So that's a mean reversion on RSI. So extended on the hourly. That's the first reversal alert we've had. And it's running for the hills a little bit. But beautiful place to take reversal alerts. 175 to 200 ADR. I mean, it's when you think back to the bootcamp on elastic band theory, I don't get much more stretch than that, does it? So they are going to profit take this. And we've got this gap. These gaps obviously are dependent on your broker's data speeds, how much liquidity was with your broker. You will or will not have a gap. Some will, some won't. But regardless, if you haven't got a gap, you've got a whacking great hourly candle like that, and that is a propulsion gap as well. So if it's not an actual physical gap, it's a propulsion gap. So it's a target either way. So New Zealand dollar CAD, already in that one now. Whoops. New Zealand dollar Swiss, that's still going. RSI extension on the hourly. M5 reversal alert is going to be all the way back up there. So you got another 13 pips. So roughly a quarter of an ADR before you get the alert on that one to go back up. New Zealand dollar yen, obviously same thing. 175 ADR, roughly a quarter of an ADR to get the alert on it. And New Zealand dollar US dollar, same thing. So all coming down at a rate of knots, and basically we're just waiting for reversal alerts on all these to get in. Obviously weeklies we've got now. Pound New Zealand is 150 of its weekly range. We're on Thursday. It's done 150% of its normal weekly range as well. So obviously the vast majority of that, so that's your low. So the vast majority of that is obviously today. I mocked up another ADR reversal indicator with extra levels on it, just out of interest. So that's 300 ADR. It's actually 325 ADR, 325% of its normal average daily range. Big move, very big move. Right, so that's your ADRs. Loads of opportunities there. All New Zealand dollar. Do not over leverage yourself. Take some if you want some. If you're too scared, don't take them, but don't get into every single trade. RSI extensions. I'm going to go through these quickly, but they're pretty much the same thing. So DAX is still open, opening range break. God, look at that for an ORB today. We'll have a look at the new version of the EA, the testing on this, but this is one of those days where it just kills it. Doesn't matter what break you took today, you're making money. 8R. Nice. Let me just catch up on the chat quickly. Good night from Los Angeles International Airport. Well, ARPA finally paid off, gents. Congrats to all. No idea what ARPA is. Sarah, will you please copy the link to the news channel that you use? This one, Financial Juice. There you go. Tony, pound, euro, and DAX dropping. Does a strong US dollar affect the DAX during Europe, as it seems to be doing today? No, the strong euro, the euro is not dropping. The euro is pushing. Yeah, that's why euro is rallying. So what you tend to do is whichever currency the index is priced in. So for the DAX is priced in euros, the NASDAQ, the DOW priced in US dollar. So whichever currency the index is priced in, if there is a rally on the currency, there tends to be an inverse drop on the index. And likewise, if you see earnings come out and the index rallies because of a lot of stock purchasing, you tend to find the currency will drop. Yeah. And it's because of the push and pull of movement between the two. So when you are buying a stock, you are transacting in euros. So the supply of euros drops as the stock gets purchased and vice versa. That's basically the cause. But you will find there are instances where that isn't true. It doesn't always work that way. It all depends on the volume that goes through, basically, as to whether or not you actually notice it. And don't forget, with FX, you've also got the cross. So if this is coming down and this is coming down, it could be, and it often is, because the Australian dollar is rallying. So the euro will be trying to rally as the DAX comes down, but because the Australian dollar is stronger, it looks like the euro is dropping, but it's not. It's the Aussie being strong. So you get the inverse, basically. So euros at the moment are pushing, which is you don't know which it is. So I say the euro is pushing because the DAX is dropping. It could be that the DAX is dropping because the euro is pushing. You don't know which is which. If they're driving money into there, often it's pulled out of the stock market to help that along the way, and vice versa. So you never know which one is doing which. But it's not always the case. So don't try and... I spent a long time trying to put together strategies based on negative correlation. It's just pointless. It's like everything. It has a strike rate at work sometimes, and sometimes it doesn't. So you see the DAX drop and you go, oh, buy the euro. What you don't realize is the DAX already dropped. So what you're doing is you're going, I'm going to buy the euro just as the DAX is pulling back, which means the euro drops. You can't predict the future. There is absolutely no way of doing it. So just don't try. Bear with me a sec. So I just got some trades I need to alter. Pitfall morning. Morning, Tammy. GJ, outlook, please. Not covering GJ in there. So it's come off of previous days and yesterday's high, basically. So rally on the pound. Basically, the pound should be bullish. We just had the news come through this morning based off of those CPI figures that we are factoring in now 5.25 to 5.5 peak rate. So that's bullish pound. So you want to be looking for buys on the pound. However, it doesn't mean the pound is just going to take off like a rocket and stay taking off like a rocket. Obviously, everything moves as it does. It moves up and down. So at the moment, that's not of any interest at all to me. We're just at the top of the range. So, you know, the play today would have been that break. But, I mean, that's very difficult. There you go. There's a 50% fill as well. Look, we often stop, and this is this propulsion theory. You can see basically all a propulsion candle is buyers. In this case, it's a large volume of buyers. So if you are long as a bank, and you have millions and millions at your disposal to manipulate the market, if somebody tries to undo your position that you have driven millions and millions into, you can basically add millions and millions and millions and millions more to make sure that it goes up to where you want it to do. And when it hits your target, you will scale out and come out, and then the market will pull back down again. So this is why propulsion gaps and support and resistance works. A previous resistance area after a break acts as support, because that was the power needed to push through that resistance being repurchased. This is why the propulsion gap indicator works and why these get filled. Partly one of the theories. So so that's holding up there. But yeah, pound yen, don't know. Not going anywhere. ARPA crypto shill. Is it? I don't know. Don't know anything about crypto. Somebody trying to pump crypto in here. Shall I ban them? Right, yeah. New member, I don't know you, so sorry, mate. You are banned. Bye-bye. Trying to pump crypto crap. Aussie dollar CAD. So we're going to look at that in a sec. US dollar yen. Again, US dollar yen's the same. And anyway, sideways. You just had a reversal on the hourly. US dollar is going to move basically this evening off of FOMC. So it might do. I mean, it might not do. But we've got GDP, and the main thing that's going to move it tomorrow is the unemployment claims. If the unemployment claims, again, come out as lower, meaning less people unemployed, then it will be bullish US. So, but I wouldn't imagine you'll get a lot of movement on that today. New Zealand dollar yen, it is weekly. Right, let's cover these RSIs. So I'll start with the 4 hours because there's only two of them. Aussie dollar CAD, 4 hour RSI extension to the downside. We had one here. So there was an RSI extension there, which was a nice entry. That played out beautifully. We're again extended on the 4 hour. So we are now down into new territory. So, which is basically when we broke this level, obviously this was the drop, and then that was the pullback. Now we're dropping down into new area. So that really here, this propulsion gap, again, when you look at propulsion gaps, you will always find a propulsion gap is a breakout of a previous support resistance. That's the whole reason they get formed, because the strength it takes to move through a resistance area means you need a hell of a lot of buying volume. And after a lot of buying volume comes a continuation buy, which means you leave a big gap in the market. So again, resistance. Tapped into, propulsion move. Next stop, 150 ADR. So it's either going to drop down to 150 ADR, that sort of area, or it's going to pull back from where it is. But either or, you are down extended. Just wait for the next reversal alert to get in long, M15 or M5, depending which you want to do. And Aussie dollar US, and that's obviously all extended on the hourly as well. So that's obviously an H1 RSI extension. Only 70 though, not deep enough for me. I'm looking for 25s at the minute. So big deep push, and then pull back potentially up into this propulsion gap here. Again, support, propulsion move to get through it, continuation, retest, potentially drop if it is going to retest, obviously. Aussie dollar US dollar, that's a 4 hour. Double bottom on the monthly. That's a really nice looking entry. Look, we got that monthly level there, and then we've got the previous monthly support as well here. So really nice buy zone here. Looking for a bounce back up into here, or potentially into last week's low. Again, Aussie dollar being dragged with the New Zealand dollar. New Zealand dollar still very, very weak. So just be careful. It might continue for a bit further. If we get some US dollar strength coming through this evening with FOMC and tomorrow with the unemployment, obviously this is just going to continue to go down. So if you're going to get into it, same as usual, you plan your entries. I'm looking for the bounce here. I'm looking to get out here. What if it doesn't happen? Let's have a look. Go back. See where you're likely to go to next. We got a lovely resistance area there, which is basically around about 100 to 125 ADR. So you could say I'm going to scale in my second entry there. Yeah. So nice extension on the 4 hour. Again, drop down, wait for some strength. Don't get in until we've got a reversal alert. Wait till the buyers are actually back on board, which will be there. And then potentially that nice W pattern reversal as we push up. And again, that's an hourly. So that is below the 25. So we'll be getting into that one. Other RSIs. So these are the 4 hours. Obviously, just covered those. These are all the hourlies. So I mean, the New Zealand's, I'm going to whiz through the New Zealand dollar pairs because they're all the same. We've just looked at all of these, basically. They're all ADR hits. So this is what I mean when I say with the strategies, the ADR reversal strategy, which is this one, and the H1M5 strategy, which is this one, you're going to get very similar entries sometimes on these. You're going to get exactly the same entries sometimes on these because when something is extended on the hourly, it is also an ADR hit. Yeah. So the same M5 reversal alert is going to trigger these trades as it will trigger all of these trades. So if you're trading H1 and mean reversion and ADR on the same account, you are doubling up your exposure because you're going to take exactly the same trades sometimes, which is why I say if you're going to do all the strategies, if you want to, have different accounts for each strategy. So you're running different strategies. You've got diversification across those different accounts then. If not, just pick one. H1M5 is my preferred. So, you know, ADR reversals, if I see a good ADR reversal, I'll take it. But 9 times out of 10, I'm getting an H1 as well. So all of those, starting off with the New Zealand's down the bottom. Let's go in reverse order then. New Zealand dollar, US dollar, hourly, RSI extension, way below the 20. So let's look at all these. So you can see last time we got down here, that's what happened. We haven't been down here for a while. Same as when we got up above the 80 level there, we did that. So looking for a pullback on this move. If you want to be aggressive and hold it for a decent amount of time, there's a very nice move. 225 New Zealand dollar Swiss. There's a very nice move of potentially 70 pips, which is just over an ADR. So your next resistance level to the upside. Actually, there's 2 resistance levels. Obviously, you've got last week's low. Previous week's low and last week's low. Pretty much the same thing. Is there. And then the propulsion move is around about an ADR from where we are at the moment. So obviously there is a good probability of a complete return to origin move on it as well. This is what I mean by a return to origin, or an A-shaped recovery as it's also known. Yeah. So that again is quite possibly going to happen. So we don't know. You never know. You just can't tell. We thought, you know, all this could happen here, but it didn't. It tanked. Another massive ADR day straight afterwards. But then look what happened. It retraced 50% of the move. So if you measure this move here, and stick a fib on it, and you keep adjusting your fib all the time this makes new lows, look at where we're pulling back to. Virtually always get a 38 retracement, which is a shallow pullback in a strong trend. 50% to 61.8 retracement is a normal pullback in normal market structure. Yeah. And then a deep pullback would be your 71.9, where you get a very weak trend. Yeah. So, you know, where we are right now, you should be able to get back into there, no problem at all, which is that area there. It might hit a hurdle there and just accumulate and then drop down for a second leg. Didn't even do a pullback there. It just accumulated and dropped. But that's where you get out. Yeah. So if we're getting into our first position there, second position there, exit. First entry there, doesn't work out, you're going to take a second entry. You've got a monthly support coming up as well at 225 ADR. Yes, you're just waiting for that profit take. The market is massively short. To be able to get out of these shorts, it has to press the buy button to take a profit. When it presses the buy button, everyone's going to press the buy button, because if they don't press the buy button, their P&L drops. Therefore, they press the buy button. When the big banks press the buy button, everybody presses the buy button, which is why we get market structure. So just waiting. So nice entry opportunity on New Zealand dollar, US dollar, H1. So I'll be getting into that on the next reversal on M5, which is around about there at the moment. Obviously, if it keeps dropping, keep dropping. I'll get in when you're not dropping. New Zealand dollar yen, same thing. Huge propulsion gap, obviously, up there. We've got two propulsion gap targets to the downside. Previous week's low, last week's low, pretty much the same thing. That's miles away. It's not going to get down to there before reversing. So there'll be an entry somewhere around here at some point. Euro pound ADR. So that's on that pound strength. Pound still rallying. Oh, hello. No, it's not. That. Pound is coming down very hard. Didn't like that. Whatever. It's really not like that news, is it? So euro pound, basically, we've got pound strength at the moment, and that's a combination with the euro strength at the moment, and that's a combination of the pound tanking at exactly the same time. So obviously this is getting a double bubble. So yeah, it's the upside on that one. So potentially got short out of there. Not quite sure why the pound has weakened so much so quickly in the last hour. So that was obviously a fake move off the back of the CPI figures. Market not happy with that at all by the looks of things. Anyway, we'll look at those later. New Zealand dollar yen. So that one we looked at, extended, wait for the next reversal. New Zealand dollar Swiss. We just popped out of last week's low, and we've broken previous week's low on that one. So next stop on that one is that propulsion gap and the 3-week low, all the way down there. But again, you know, just get in on the next reversal on whichever New Zealand pair you want to choose. And if it doesn't go straight back, do the 50% retracement or do a complete V-shaped recovery. Just scale in as usual on these. No reason why this should be quite so weak, this New Zealand. Obviously, the Swiss franc is powering up with the euro at the moment. So obviously, this is probably going to continue to come down even further. So maybe look to get down there. But again, if you're using the EA is just going to get you in anyway. So up to you how you obviously trade them. If you trade them manually, obviously you can take your pick. One sec. Just adjusting some positions. So that's New Zealand dollar Swiss. So there's all your New Zealand dollar CAD as well. 200 ADR we've hit on that one. There's your 5-minute reversal alert. So I'm in on that one, first entry already, and that is off of the H1 RSI extension, and we've popped off of 200 and it's dropping again now. So massive extension. Worst case scenario, best case scenario, medium case scenario, somewhere in the middle. So there's all the New Zealands on the hourly RSIs. Pound New Zealand as well, massive extension to the upside. Pound's obviously weakening at the moment, not as much though. So you can see how weak this New Zealand dollar is. I mean, again, take your pick really. There's a potential hurdle there on this one. But I mean, look at this extension. It's just ridiculous. Sitting on 89. We haven't been up here all year. So this is obviously the biggest, strongest move strong pound, weak New Zealand, perfect storm, 325 ADR move to the upside. So if you're getting in here and it decides, no, we do fancy a bit more, we've got the monthly high, you're going to find limit orders triggering at that level. So that would be second entry, and then get out when it comes back down. There's no way it's sustaining that without doing a pullback on it. It's not going to happen. Just not going to happen. So just wait. What else we got? Pound odd. So that is extended now on the hourly above the 25. Again, nice area, nice propulsion gap fill potentially coming. Nice resistance to turn support if we are going to rally and test the monthly high. If it just decides to go parabolic from here, then we'll get limit orders triggering probably at the monthly. So entry 1, entry 2, exit. More likely exit down there. So that looks good. Nice extension. Euro New Zealand will be the same as the pound New Zealand, pretty much parabolic, because it's the euro is rallying at the moment. It's still going. Look at this thing. It's like a rocket. Look at that. 386 pips off of 125. So again, 300 ADR plus. Huge move. More even. So yeah, big move there. New Zealand dollar, US dollar, weekly range hit. Just waiting for reversal alerts on stuff. You're not going to get one. All the time everything's going parabolic. You're not going to get a reversal alert, so you don't need to worry about it. Just wait for the move to be over and wait for the sellers to start a move and then see if the profit take move starts from there. So big extension on Euro New Zealand. So again, 85 RSI. So the last time we were up there was there. Yeah, so it's very similar. Look at this move. Very similar. Multi-day parabolic move. And then pullback. Deeper pullback. Couldn't break that high. Eventually, we did the 50%. Yeah, 30%, 50. So when I talk about the fibs, and what I class as on a fib is a shallow pullback is the 38. A average pullback is a 50. A deep pullback is a 71. 68 to 71. So if the market structure is going to continue with a low, a high, and a higher low, that higher low usually falls somewhere between 38 to 71. Yeah, that's the typical pullback on a market structure continuation. So this one here, you can see we pulled back 38, back into the 38, and then we came back down and tapped the 61.8. And in between, we didn't get a 50 on that one. So that's the 50. Yeah. So stick a measure on this when that move finishes, you know where it's going. And the better support resistance after you've got into a short is always going to be an area of confluence. So in this case, that propulsion gap, well, this whole thing is a propulsion gap, isn't it, really? But the high of the propulsion gap is 38. So if they're going to tap into that propulsion and bounce off of it, that's your level. Your 50, funnily enough, is bang in the middle of the propulsion gap. Mind you, it's only drawn there, so that's not really true. The propulsion gap is all of that. So 61.8 is your 50% of the propulsion gap. So deep pullback would be that. And this is all assuming, obviously, we're getting a continuation. If you don't get a market structure continuation, you get an A-shaped recovery or a V-shaped recovery, depending if it's dropped or pushed, don't you? So use fibs. They are very, very useful when you get parabolic moves like this for looking to where we're going. And if you've got a nice propulsion gap that lines up with a nice fib level and a previous resistance, which could well act as a support level, that's all you need, and you know where you're going. And obviously, as you scale into your position, so if you get in short and that doesn't happen and it does this, pushes up to there, readjust your fib on that and then re-look at the levels. And then your 38 pullback, you'll find will probably line up with that. That's where you'll get out your position. So that's Euro New Zealand. Euro odd also extended on the hourly. Again, parabolic, just get an extension. So that will also be a short when we get the next reversal alert, which is going to be there. Aussie US we've covered. Aussie New Zealand off the charts, isn't it? So above, look at that, straight up. That's a this is a chart pattern. Not many people know this one. Anyone know what this one's called? I've forgotten the name of it. I think it's so this is basically a diplodocus. Make that one up. So yeah, basically it's just a big move. I'm just making stuff up now. I'm bored because I'm waiting for the market to do something else apart from go parabolic. So yeah, wait for the 5-minute reversal alert. Somewhere in there, we're coming back. And finally, Aussie dollar Swiss. So that one's still going strong. Swiss franc. Propulsion gap is holding at the moment, but we've got that downside target. So potentially down to last week's low, 3 week ago low and previous month low. So if that doesn't play out, looking at 3 entries on that move, but you're already extended. So very similar to this. Look. So when you're looking at getting into positions, always whenever you're getting in and you're looking at, right, what if this doesn't work scenarios, look back on your charts. There will be many times where it hasn't worked as we're expecting. We haven't got the bounce. We don't always. The RSI getting extended doesn't mean this is going up. It means the RSI is extended. It's a condition in the market. Doesn't mean anything. The market will do what the market will do. So we're down here at the moment, and we were down here then. But look what happened afterwards. We dropped for 3 days solid. So if we're here extended and you're getting into your first position and we're going to drop for 3 days solid, look at where we're going to be. Down here. So plan your trades. If you're going to get in and it drops down to 125 and you see a push, don't take a second there. Your worst case scenario is what you should be looking at. Entry, space it at least half an ADR apart, if not a bit more. Space it at least half an ADR apart. Give yourself a chance to get out of this position on a 38 to 50% retracement within an average daily range movement. Yeah. So exactly like this. 1, 2, 3, 4, out. 1, out. Brilliant. Doesn't work. 2, out. Brilliant. Doesn't work. 3, out. Brilliant. Doesn't work. If it breaks that level, it's going to have to pull back because this thing will be down here somewhere. When it gets down there, it doesn't do anything but that. Always. Always. Which is what I was saying in the Telegram group. We were talking about this the other day. I think it was yesterday, actually. About your settings on your RSI. If you want to be more conservative and have less drawdown, just adjust your RSI levels. This is the H1. Currently, you've got the 70-30, you've got the 75-25, I've got the 80-20 drawn on here. If you want to be super, super conservative and make sure that you get into as little drawdown as possible with the highest accuracy rate, don't take any trades unless it's 1585. You won't get many entries. You'll have had one. There, that's it. But you've also got 100% strike rate. Yeah. So the less you use as a figure on the RSI, the more entries you're going to get, yet the more drawdown potentially you will have when that RSI doesn't hold. It doesn't hold all the time. The instances it doesn't hold, you just got to deal with them, haven't you? So use whatever levels you want. There is no right, wrong. I'm currently using 25.75 on the hourly. I think it's a beautiful sweet spot. I get a lot less entries, but then I'm a lot less risk tolerant these days than I used to be. So it suits me better. So there you go. That is all of your RSIs and ADR extensions. Opportunities galore, but all based around the Australasian pairs. So do not over leverage yourself too much. You know, keep in mind that this New Zealand dollar drop, this is Aussie, but this New Zealand dollar drop could be the start of a 3 to 5 day move. We don't know. It may not be. I'll be very surprised if it was. So your break to the downside So your 15-minute opening range break gave you somewhere about a 5 to 6 R return. 5-minute opening range break gave you a 2R. Your 15-minute opening range gave you a 1.5. So all opening range breakouts to the downside worked nicely. However, we've got this little gap now looming over us. So I reckon at some point we'll be coming back up into there, but we'll wait and see. Right, that's all analysis done. Let's have a catch up on chat. Shroud, is there any auto fib indicator which measures the level of recent range move? There are auto fibs out there. When I was trading Elliott Wave and studying Elliott Wave, I used auto fib a lot because Elliott Wave is based on Fibonacci movement. It's based on calculations of distance and time. So the problem you will find is all auto fibs need to be fine-tuned and adjusted. There is never a setting that will get the fib right. So there's a lot of fibs out there which what they will do is they will use yesterday. So you can have it set so that its tolerance is yesterday. So it will draw the fib on yesterday's moves. And today you're looking for a pullback into some of those levels. Yeah. There are ones that will use weekly levels. Yeah. And it will calculate a pullback on those levels. Yeah. There are ones that try to look at the most recent movement and draw a fib on that. But how it uses its calculation will mean it might draw it on that move. It might draw it on that move. Yeah. Just do it yourself. Why do you need an auto fib would be my question. Can you not see where you need to draw a fib? If not, do a fib course. Most recent low, most recent high, fib extension. So I don't an auto fib, yeah. What if that is how you measure? And again, all of this, everything you do to do with anything in trading is discretionary. Trend lines, you get a chart. If I give 20 people in this room now this chart and say, draw me a load of trend lines on it, I'll get different ones back. Everyone will draw trend lines slightly differently. Some use wicks, some use bodies. Some will use different points on the move to draw their trend lines. Some of them will be drawing trend lines at the lows. Some of them will be drawing trend lines at the highs because they think it's going to bounce and the others think it's going to drop. You draw a fib on this chart. Some people will draw it from here. Broken it. Some people will draw it from, oh God, there. Some people will draw it from today. Yeah. So if you're drawing it from today and you're drawing it from yesterday, you're going to get a different reading on your fib, aren't you? So which one's right? You know the answer to that. There is no right or wrong. It's no idea. It's going to come back at some point into this area. But whether it's coming to there, or somewhere in between, I have no clue, and neither do you, and neither does anybody sitting in any bank anywhere in the world. It will do what it does. So it's just a guide. So something that is, you're automating something that is discretionary has a 0% strike rate because every time it's drawn on the chart, you're relying on it being right, but you're relying on the person that coded it thinking he's right and having the same input as you as to whether he thinks the fib should be drawn at that level or not. And when you factor in timeframes on it, and the auto fib has just drawn you a lovely little long there, I'd be looking at this and saying, what the hell are you talking about? We've just done the pullback. This thing's going short all the way down to there. Change time frame, completely different overlook. Yeah, this is a short. It's just a pullback on a short move. Look, 38 retracement. This should be dropping now and starting next leg down. Yeah. Hang on a minute. No, it's not. What are you talking about? You've got no idea what you're talking about. You're a crap trader. This is definitely a long. Everybody's going to look at every piece of market in a different way, which is why the market moves up and down. Because if I didn't look at the 4-hour chart and say it's a short, and you didn't look at the 1-hour chart and say it's a long, we wouldn't have difference of opinion in buyers and sellers, and therefore this thing would just be flatlined. Why the market exists, isn't it? I have no idea if you're right or I'm wrong. You're right or I'm right. Or we're both wrong. We could both be wrong. It could just go sideways for 3 days. Not trying to automate stuff. DIY. Silent. That was a fake out for liquidity grab on the pound to keep playing the same range. Yeah, might be. Pound making moves, trying to catch people out when Bailey speaks, or maybe they already know. There's a lot of conspiracy theorists in here, isn't there, today? The market, they've moved it that way because they're trying to fake you. Now, the market's moved it that way because they had a load of orders to fill on their longs. 5% of the market is made up of retail. Do you really think they're going to spend that much time and effort trying to fake out 5% of the market when 95% of it's got more money than the other bank has? Smart money concepts. I understand them and I get them, and I think, yeah, there's a lot of warrant in them. But before the word smart money concept came around, the double bottom and the just overshoot of double bottom false breakout existed before the word smart money concept was invented. Somebody just said, that looks like they've just gone beyond that because that's where we put our stops. Who invented stops? Retail traders. Banks have never used them. Seems to me like somebody wanted to make a course and sell it. But anyway, that's my conspiracy theory. Silent has asked for it. Here it is. Gold. So we are still not going anywhere on gold. I like it as a long because I think the US dollar is going to weaken, but I'm not sure because we've got the unemployment figures coming tomorrow and it might strengthen. So where we are right now, there's no opportunities. The opportunity for a long was there. The last opportunity for a short was there. As far as I'm concerned, it's bang in the middle. It can go up or down. You've got propulsion targets to the downside caused yesterday, which they might come and fill first. Otherwise, they're going to head up and sort these out and come onto this support, which will turn potentially resistance. That's gold. No idea. It's sideways at the minute, isn't it? And it's been sideways for literally 2 months. Month and a half, month and a bit. No idea. We're down at lows of range, though. So, you know, you've got to say it's probably looking more long than short. It's in an uptrend at the moment, but all trends come to an end at some point, don't they? So I don't know. Very tricky one at the moment. Same as oil. Oil, we've just managed to break out the highs today. Actually, that's a nice breakout. Look. So this is the high. This is the new high going in that we were looking for. We were looking for the low, the high, the higher low, and we were looking for a new higher high. We've stuck sideways for a week. It looks like we're just about to get it, but we're running straight up into this lot, which might bat it back down to these lows. So if oil is, as we suspect, along, well, as I suspect along, this is a breakout trade that could well start a movement. But tricky, very tricky. Again, sideways. So much sideways at the moment. So much sideways. Everywhere. I wonder if brokers silently investigate or put money behind their successful traders. Huh? If they like your strategy, I guess there's a possibility, yeah. Ask Tom Hugard. He used to work in a brokerage. He'll know. Cobra Mongoose, the Armand. Oh, we were talking about my Diplodocus. Is that Adam and Eve? Yeah. 2 red, 1 green for the DAX, whatever that means. I don't know what that means, Tony. Did I do oil? Just did that, Henry. There we go. And we'll call it up on chat. Right. That's everything. Is there anything I haven't covered that anybody wants to look at? I'm going to go over my new EA analysis as well in a minute. But if there's anybody got anything else they want to have a look at, let me know. German news. Oh, yeah. Is that? Oh, IFO. So yeah, that was the IFO. So we had a little rally off the DAX. So yeah, so there's been 2 New Zealand's trigger so far. So we've got New Zealand dollar CAD. 5-minute reversal triggered there. It's not got anywhere yet, so it's certainly put the brakes on straight off 200 ADR, but looks like it still wants to come down a little bit more, maybe. And New Zealand dollar yen just had the reversal, literally just triggered the trade on that one as well at 175 ADR. Again, that's H1 RSI extension. So trades triggered on ADR reversals today. We've had New Zealand dollar yen and Aussie dollar CAD has also triggered. Oh, that's the second entry on Aussie CAD. So yeah, so Aussie dollar CAD, we had an ADR reversal yesterday here. And this is obviously just second entry gone in today on that one. Somewhere in here, because obviously it's just made a new low. Right. 162K. Very nice account. Congrats. What's that? Is that the other 162K? I haven't got 162K account. Don't think. Oh, is the signal hit? I haven't looked at the signal on MQL5 for a while. Maybe is that what you're talking about? Is that hit that? %. Oh, look at that. I've hit 200%. Woohoo. 84 weeks that H1M5 signal's been running. 200% return. That's not, yeah, so that was only started with 20K. Tim, you're either on your broker's A book or B book. Yeah, so with brokers basically I don't think brokers look at traders at all to mimic their trades. I'm not aware of it. I've never heard of it anyway. So obviously the A book, as soon as you join a brokerage, they immediately put you on the opposite side. So basically, whenever you take a trade, they take the opposite side of your trade because they know that you're going to lose your money. But as soon as you start making money, they start losing money. And as soon as they start losing money, they take you off of that book and they just make money on your swaps and commissions. So that's the business model of the broker. Because 90% of traders lose 90% of their money in 90 days. So if you deposit $1,000 with your broker, they're pretty much guaranteed to get $900 of that. So why not take the opposite side of your trades, take that $900 and make money by doing the opposite and making money that way as well. So I could have sworn I saw it at 162K. 162K. No. Oh yeah. No, you're right. 162K. So this is the ADR reversal. This started off 100K. This account, so it's 162K now. Been trading. Since the beginning of March. No, that can't be right. Oh, I've got. Right, wrong way. First of March, April, May, 2 months. Yeah, so done. Okay, 2 months, that sounds like a lot. Right. It must be. It's what balance is. So I don't know. Anyway, right. I'll leave it there. Oh, no, I won't. Actually, I'm going to quickly explain what the analysis I've been doing on the 5-minute pre-market opening range breakout strategy. So for those that don't know, if you haven't been in the live room, obviously I've got the opening range breakout EA, which trades pending orders on the opening range or the pre-market opening range. What I mean by the pre-market is when the market opens on that candle there, you take the range that was formed before that opening range candle. Yeah, that is a demo, by the way. Yeah, it's not real money, that one. It's a demo account. Those VPS accounts are there to show every trade, basically. So it takes basically a new variation on the strategy, which I've been working on after witnessing what's been going on at the open, is taking this 5-minute candle. So this little beauty here, we use that as the opening range rather than 15-minute, although I am going to do all the testing of this strategy on the 15-minute. So what it's doing is it brackets that order. This is the logic. Brackets that candle with a buy and a sell. As soon as the market opens and a order triggers, in this case short, it cancels that pending buy order and places a short order, obviously gets in with a short order, and it uses a 1.5 hour target. So let's just draw a fib on. Yeah, so in this case, it would be that candle there that we're bracketing, right? So 1.5 hour, as you can see, is there. That hit straight away within a minute or so. You then can have a second order, if you wanted to, as a runner, which you can use any risk reward you want to. So I've been looking at somewhere between the 3 to 5 hour return. And that seems to be the sweet spot for a second bite of the cherry if the breakout is going to hold. So that is a perfect example. Today was a prime example. What would have happened today is the EA would have placed 2 orders there. It would have triggered both orders. It would have taken off the opposite sides. It would have moved down. It would have hit target there, and then it would have pushed down, and it would have either hit target there or hit target there. Job done. That's it. It doesn't take any more trades. It's done for the day. That's, depending on the size of your account, that is around about 1.75 to 2.25 return percent. That's it. If what happens is it triggers short and doesn't get to its target, and then it stops out, which is on the opposite side of that candle, as soon as it stops out, it flips long with a buy order. So there's no pending orders, there's no hanging about. It basically gets in. As soon as it hits the other side, it stops you out of that trade. You lose your whatever, and you go long. And the same applies. So in this case, what would have happened is you would have gone and flipped long, and your targets are exactly the same. So we're looking for that break to the upsides to get to here to hit 1.5 hour. And if you've got a second position on, you're looking for whatever you want target wise above. Yeah. If that is hit in profit, done for the day. We're finished. That's it. Right. So that's basically how the logic of the strategy works. So the idea being is if the first one works, you're done. If the first one fails and the second one works, you're done, because what you're doing is you are using a 1.5R return. So your profit is 0.75, yeah, on that move. Yeah, so a failure, a loss, a win, which is more than the loss, equals a profit, right? So we're basically making money. So what I also have is a trailing stop. So that is the variation where there is no trailing stop. So I've also got a trailing stop, which I've been back testing as well, and using different variations of the opening range. So let's say, for example, this is the opening range, these green lines. It's not in this case, that's a 15-minute, but You didn't get the point. That's your opening range. So your trailing stop is a multiplier of that. So as price pushes up, if we were using a 100% trailing stop, as we pushed up to there, the stop loss would have pushed up by the distance that you break out, bringing you into a break even. The danger of that is if you then pull back before you hit your target, you get stopped out with either a break even, a tiny profit, or potentially a loss, a small loss. But a smaller loss than initially you would have had if it had just stopped out in the whole position. So I've been doing testing with different sizes of trailing stops and different targets. So that's basically what I've been running. And I've only been running it on the DAX, and I've only been running it over a period of a year, basically. So this is the testing results that I've got so far. So this is the initial test that I did, which was just testing targets. So what is the best TP and trailer? In fact, I'm going to scrap these because these are the previous version. The previous version of this development version was only taking one trade. I then adjusted it to take two trades. So i.e. get in with one and take a runner. Reason I did that is because I realized that a 150 TP has a very low strike rate. Anything above 150, the strike rate, the drawdown rather, not the strike rate, the drawdown, exponentially goes up. Yeah. So the further away you get, the more money you tend to make, but your drawdown goes up. So what I decided to do was pick a sweet spot of 3R and 5R returns and couple them with a 1.5R. So the first trade is always going to be 1.5R. The second trade can be somewhere between 3 to 5. And I wanted to see what difference it made to the return on drawdown, which is obviously important, and to the overall drawdown. So that was the next test. So as you can see here, we generated between 30 to 70K with a maximum drawdown of about 22%. So the second variation did exactly the same tests, no trailing stops at all. So you can see the first TP was 150 in these 3 instances, or 4 instances, 5 instances there. And then a 250 to a 500% target on your stop. So basically these TPs are, this 150 is a multiplier. So if your stop is that distance, your TP is 150% of that distance. Your second TP is 300 to 500% of that distance. Yeah. So as you can see, the drawdown remained pretty stable, somewhere between 11 to 15% for the year, but the profit jumped from the 30s up to the 70s to 90s. Yeah. So huge increase in profitability, as you would expect, because if you think about what I've done, all I've done is I've taken this line of the spreadsheet and coupled it with this line of the spreadsheet. So add those two figures together and add those drawdowns together and average them. And that is what the return will be. Yeah. So it doesn't give you exactly that figure because we're using a slightly, with the drawdown, obviously, you have to exponentially multiply your drawdown as well as your returns. So every time it has a bad whippy open, you are using twice as much risk and you are losing twice as much money. But I have a cap of 4.5K on this. So I'm basing all these on 100K. 4.5K is my daily. It will stop at 4.5K. So you can't add these two figures together because some days it will stop at 4.5K where it wouldn't have stopped at 4.5K on these because we're using twice as much risk. Anyway, that's the complicated maths bit. And long story short, somewhere between 77 to 92K is the return. Your drawdown is looking somewhere between 11 to 15%. And we are just targeting 1.5 on our first, and then we're targeting between 3 to 5 on our second entries. So what I then did was rerun this, but using multiple versions of trailing stops. So what these do is they just basically place the entry and the stop, and that's it. It either goes and hits TP or it hits your stop. Typical risk reward trading, as everybody's always taught. Add a trailing stop into the mix and you get very little difference in results. So these top 5 targeting 1.5R and somewhere between 2 to 5R, yeah, are returning similar amounts of money, 70 to 100K now. So ever such a slightly more profitability, not a lot, but a little bit more profitable. And these are using trailing stops of between 200 to 300% of that range. Yeah. So you can see the difference is the drawdown is ever such slightly different. It's a little bit better. And the profitability is roughly the same. But using a trailing drawdown, a trailing stop loss, doesn't actually make any more money. And it doesn't lose any more money. So the only thing it has a positive advantage on is the overall drawdown. And that ranges now from 9 to 13%. When you look at the original figures here, that ranged from 11 to 16%. So the trailing stop, the only thing the trailing stop does is it slightly reduces your drawdown, but it makes no difference to the profitability of the strategy. In fact, what it does when you visually watch it is it annoys the crap out of you because it stops you out of trades that would have hit your target because you're using that trailing drawdown. Every now and again on a day, you'll go, oh, I only lost $200. I would have lost 500 thanks to trailing drawdown. On the other days when you would have hit a 5R return and you only get a 1.2 return, you go, oh, for God's sake, trailing drawdown, you can't win. So my conclusion is up to you. Doesn't matter. Trailing stops make virtually no difference to your outcome. However, if you're trading prop, it makes a slight difference. But on visually watching it trade, what you tend to find is you have good weeks and months where it does that. You'll have mediocre weeks where it does that. And then you'll have bad weeks where it does that. Yeah. This is where we pass evaluations and withdraw money. This is where we sit in evaluations and don't do anything, and we have to take a retake. This is where we fail evaluations. These you don't have a control over because it's random. So this is an overall on the year. And what you tend to find is it has a bad run for some reason. And it goes on for weeks where it just can't crack the breakout. And it seems to be over the summer months. So obviously we know what happens in summer trading. Summer trading, when we get started, it varies, but late July through to September, the market liquidity drops. ATRs drop, ADRs drop, everything drops. There's just low volume in the market. Even when you've got a news event, you tend to hardly get any movement out of it. It does move, but it's got to be something pretty catastrophic. So it looks like, to me, that it doesn't matter what set files you run, whether you use a trailing stop or not. And this is the conclusion I came to from the original opening range breakout strategy development as well. It's the time of year that is what impacts the strategy, and it's the summer trading that tends to have the negative impact on it. But what do you do then? Stop trading during the summer? Not pay your bills during the summer? You can't do that, can you? So you have to look at this, I think, as for running it on your own personal account, this thing's absolute goldmine. In the fact that on a 100K account, it's going to produce somewhere between, on a bad year, 50 to 80% return. Fantastic. On a prop account, it will absolutely blitz it. I ran a test on it during March, I think it was last year, and it produced 27 grand in 3 weeks. But then it stagnated for about a month. But that 27 grand, right, has paid my mortgage for the entire year. So you run it and you let it run and you just let it run and you just keep buying evaluations and passing and letting it run until it gets to that point where it just milks it. And then you go, thank you very much, I'll take that money. It's always going to be more than you're going to spend in an evaluation. But you're not going to be able to control when it is. And it's exactly the same with the opening range breakout. The edge is long term because these breakouts are going to be on some days like that. That's a 4.5K loss. And again, I haven't done any testing with without using a loss limit. So there's a loss limit in here. Yeah. There. Right. Close everything and stop when we get to that 4.5K. I haven't run tests taking that off. On a personal account, it's up to you. Obviously, if you say to the EA, right, you've cocked it up royally today, stop, or not. If you don't, we could possibly get a much bigger return. But I'm developing this from my perspective in relation to passing prop. So, yeah, that's where I've got to so far with it. I've done no testing whatsoever on anything but the DAX at the moment. But that is the outcome. And I'm trying to keep it as simple as possible, as low moving part as possible. The simple strategies are always the best. So literally, I'm not interested in anything, but just get me in if it does that, and hopefully it does a biggie. If it doesn't do a biggie, right, fine, let's try the other way. And if that doesn't work, fine, go the other way again. And keep doing that until you either hit my max loss or get me out with a profitable trade. And that might still be a loss day. But the strike rate of it on these, as you saw today, unbelievable. And some of these ones where you're going for the big home runs, I mean, big home runs with a trailer where your second position, I've only gone up to 5 because I couldn't find, let's go look at the other one. So TP of a 10R return, look. A 10R return, so i.e. that's the opening range. We're targeting 10 times the opening range. Yeah, so a 10R return on the trade. Returns 60, what was it? 60 grand, 64 grand. A 3R return returns 37, but look at the drawdown, 32% as opposed to 11%. Because if you think about it from an ADR perspective, if you get a big opening range, 10R might be 250 ADR. It's just not going to ever get to it, is it? So again, what the EA does is it closes all the trades at a specific time. So again, there's a time thing in here, pretty much the same as you saw before. This is an old screenshot, but so there's a time setting where we close all the trades. So 2 o'clock, basically, I close all trades. So what I want to do with the DAX is I want to be out by the New York Open. So if we've had a breakout to the upside, right, and we haven't hit my 5R target and we've done that, when that New York Open happens, I'm closing it. I'm out. So again, that could be tested. There's also, I mean, you know, with all EAs, with all strategies, there are unlimited things you can test and you can bend and you can tweak. I'm trying to keep it as simple as possible. Just take the break, target that and that. That's it. Not interested in anything else. And just basically get me out if it's looking like it's a bad day. Simple as that. And obviously, as you can see, very, 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 very good returns. But you're going to get stagnation. Like every strategy, it will have a stagnation period where you might sit there for weeks and it just doesn't make a new high. It makes a little new high there and then it pops back down because it's it's a breakout strategy. If you don't get a breakout, you don't make money. Yeah. So I'm still developing it. I've got more work to do on it, more testing to do on it, but we've been watching this thing. You can trade this with the existing opening range breakout EA, by the way, as well. Obviously, the only thing it won't do is when you stop out, it won't auto flip the opposite direction. That's the main difference between this new variation. The old one, it will break you out long. Then it will take the pending short because it doesn't delete pending orders. But if that doesn't work and you get a double-ended stop out, it needs to break. It needs to pause back inside the opening range to replace the pending orders. So that's the difference. That's the main difference. There's a completely different logic in the way that this one trades. It's an always-in strategy rather than a wait for pending order break strategy. So it's different. But yeah, looking good. Looking good. So I'm going to live test it. I'm going to hopefully get a production version ready that I can start testing, forward testing with it, just to make sure it can trigger the trades as well. The other thing that worries me is a lot of these ranges, when you do visual back testing, are very small. And this one was perfect today because that is where the candle opened, bang in the middle of the range. right? So it's got plenty of time to place these orders. If you've got a opening candle that's like this, for example, it's going to place a pending there and a pending there. Quite often at the open, this thing could have jumped up here before your pending order's placed and you never get triggered. So some of those trades may never actually trigger. So again, I need to do live forward testing just to see what the actual market execution's like. And that will need to be done for a couple of months, basically. A couple of weeks at least. When will you be releasing the Lambo EA? I don't know. Yeah, it needs to run on testing. Got to do testing. Test. But yeah, I mean, as long as it works, then I'll stick it out there. But I was thinking of putting it in with the current opening range breakout EA. The logic is vastly different, and the way that this is built with these different ranges, it uses what's called grouping on the ranges. So it groups batches of orders together so that it can do the retakes of the orders and replace pending orders. So it needs to know which group is stopped out, which group is still running, which group hits target, so it can determine whether or not it does replace them if you use the continuous mode, etc., etc. It just doesn't work with this new way of straight in, straight out. So I don't think I can shoehorn the difference in logic into this. I could put a drop down to say ignore all of this, but I would have to replicate the vast majority of this logic again, which makes it very bloated. So it would probably have to be a different EA, I think. And it's also simplified. There's a lot of inputs in here. The other version's got a lot less inputs because there's only one range that we're trading, and the option to take one trade or two trades. So, but what I'll do, because I've reused, I would say probably 30% of the code, so I'll probably release it cheaper if people want it. You know, I might live test this and it's untradable. Yeah, don't forget we are trading a very, very tight candle. I think that we're going to find that some of these aren't going to be able to trigger orders, in which case then I need to build more logic in to determine what do we do. So if we bracketed that and if the market had shot down to here before it placed that order, what do we do with that order? Do we want that order still there in case it pulls back and then drops? Or do we want to get rid of that order and say, oh, well, we missed it, but leave the opposite side in play? I don't know. Again, this is all stuff that comes out in the wash when you live forward test. Back testing is brilliant for developing concept. When it comes to the real world, the market and your broker execution is not as it is in the strategy tester. Spreads. I'm testing on a fixed 2-pip spread. As we saw with Surge Trader, when I was trading that account yesterday with Surge Trader, their spread was awful. You're spreading 3 to 5 pips. So your results are going to be totally different. And again, you can do all this in the tester. You can say, you know, don't use a 2, use a 5. You'll get a totally different result off of a 2 than a 5 because your placements are different. Some of your 150s might not get hit because they'll be a little bit further away. You're going to get different results. If they're still profitable, though, and this is part of what your robustness testing in strategies should be, you should always test over different spreads. A robust strategy needs to work in all market conditions. If markets are tight, you're going to get a tight spread. If markets are illiquid, you're going to get a wide spread. You don't know which market you're going to trade through or when those orders are going to trigger. So you've got to test different spreads, all part of robustness testing. So that needs to be tested. And obviously all the other instruments, NASDAQ, DOW, FTSE I want to test on as well. Because the FTSE is really nice and orderly on its breaks. Its first candle tends to be slower and stronger. So I think the FTSE is a really good contender for this pre-market. Whereas with the 5-minute, quite often it's done half of its move in that 5-minute candle and you end up with a lot of that a lot of the time in the FTSE. Which is why I don't trade it with the opening range breakout strategy, because it's not as volatile as the DAX. Again, volatility changes. You might find the DAX suddenly becomes illiquid and the FTSE goes mental. We don't know what's going to happen in the future, do we? So lots of testing to do. I'm very thorough. Euro US dollar music. Right. We're waiting for news on the US dollar. Don't know, middle of nowhere at the minute, aren't we? That was your last long. We did a nice double bottom yesterday. So at the moment, looks like potentially a nice long. It looks like we're just sweeping this monthly low. So we've come down, we've pushed back up, we've retested. So potentially there's a W pattern reversal going in back up into resistance. Again, use your fibs. It's a 50% retracement. Propulsion gap. Propulsion gaps, you will virtually, not always, but a lot of the time you will find a propulsion gap is always sitting at a fib level. This is market structure. This is why fibs work. This is why it's all done by human beings. Human beings watch levels. We're all watching this level. Banks too. Yeah. They're not watching this level as in they're drawing a fib on there. They're watching this level as a 50% retracement on a previous move. They're not going, oh, look, the Fibonacci level is there. They're going, half of this move back will add that sort of logic. Yeah, they're not looking at fibs. But that's why fibs work, because the logic of how traders work in banks. Okay, there we go. That's all covered today. Lots more triggered on H1 now. So we've actually got some risk back on, which is nice. Hopefully, best case scenario today, all of these New Zealand dollar moves go, nah, don't fancy it. A-shaped recovery, V-shaped recovery, whichever way you're trading. And all this just turns into that. Worst case scenario, this New Zealand dollar is for some reason going to die on its arse and we're going to drop for days. Tune in, find out. Right, I'll be back this afternoon at 2:20 for the New York session. Back tomorrow at 7:50 as usual for Frankfurt again. No news really to worry about today until we get... Oh, yeah, no, we have, sorry. Forgot that. We got Bailey talking at 10:30 and at 2. Let's just see where he's talking, actually. Net Zero Delivery Summit in London and Fireside Chat. Due to participate in a fireside chat titled Inflation and the Economy at the Wall Street Journal's CEO Council Summit. That sounds cozy. So, yeah, might get some volatility out of that, might not. He's not speaking at anything that's particularly amazing, I wouldn't think. So, no news to worry about until FOMC. And we may well just sit there sideways today after these moves, waiting for FOMC. So, light on the news. Emmett, how can you manage so much positions at the same time? Do I have multiple monitors? Yes, I do have multiple monitors, but I only have one chart. That's how I manage multiple positions. I can see them all on one half of the monitor. Why do you need multiple charts, multiple monitors? This is a myth, right? I have got a beautiful trading setup with a huge 5-inch monitor, something. I don't know. Whacking great monitor, size of a telly in front of me right now. I've got two 26-inch monitors on tilt next to me, right? And I can cover my entire screen in charts. However, why not just have one MT4 open with a dashboard that pings an alert at you every time there's a trading opportunity so that you can open that chart and go, that looks good. I'll get in. Why do you need a million monitors? If you trade smart and use alert systems, you don't need to be watching every chart. I used to be like that. I used to have 3 MT4s running and I have every FX pair and every instrument up in front of me. All that happens is I'm looking at this stuff going, still waiting. Yeah. How do I monitor my open positions? Well, I watch them. And I wait for them to go green in there. And every time they go green in there, I get an alert from my VPS. Damn, I've shut them all. It's because it's banked everything. But I get an alert from my VPS to tell me it's just closed an order. And I go, thank you very much. I'll go and spend that. That's it. You don't need a million monitors. You need one monitor. You need one MT4. And as far as I'm concerned, and if you go and watch the bootcamp, you need two dashboards, the RSI dashboard and the ADR dashboard. And you need the trade manager dashboard. Yeah. This tells me what I'm in, tells me what my exposure is, tells me if there's anything I need to worry about. Otherwise, I just wait for that to go green and take that out and spend it. This thing alerts me when there's an opportunity to get into the market. So I look at the chart and I go, oh yeah, there is an opportunity to get in the market. Hit the buy button. That's it. That easy. Don't need to overcomplicate it. How does watching, what are the reason, and this is an important reason, take it on board or not, but the reason I do not have all charts open, what is one of the biggest problems traders have? Yeah, why people lose money. Yeah. That's one of the biggest reasons traders lose money. Over trading. Yeah. Overexposure caused by over trading. The New Zealand dollar is massively extended to the downside. Fantastic. Let's go long on New Zealand dollar CAD. Let's go long New Zealand Swiss. Let's go long New Zealand yen. Let's go long New Zealand US dollar. Why? Because they're all really good extended setups for mean reversion. So if you're watching all of your charts and you see all of these opportunities come up at the same time, you're going to hit the button on all of them. If you're not watching any of those, you're not going to hit the button on all of them and you're not going to get overexposed. When the New Zealand dollar drops by 2 ADR today and you're in 2 positions, that's all that the pain you're going to get. If you're in 7 positions, it's going to hurt hard, right? So if you've got all the pairs in front of you, what you're going to be doing, you're going to be tempted into trades that are not actually by your strategy. So if you use an RSI-based strategy, for example, don't have to use any strategy you like, and you've got the euro pound up on your screen right now, yeah? Is this an entry? Is this an RSI extension with a 5-minute reverse alert entry? No. But I've got this up on my chart and I can see it's a beautiful bounce off of a previous support. Oh, that's great. I'll take a long. Stopped out. I've just lost 1% of my account. Why did you lose 1% of your account? Because you were watching the euro pound on a monitor over there and you saw a good support bounce, which you don't actually trade. You're an RSI mean reversion trader. So what you've just done is lost 1% of your account because you looked at a chart. Not a good trade entry, is it? Might be, might not. I don't know. But if you remove all the charts, the temptation to press the button and have that itchy trigger finger is removed. If you just watch what you're in and concentrate on this and focus on only getting in when the market is right for the strategy that you're trading. And obviously, if you're not trading my strategies, then these are useless. If you're trading Bollinger Band strategies, get a Bollinger Band dashboard and let that ping up every time there's a Bollinger Band extension. Yeah, whatever your strategy is, whatever the market condition is that signals a potential signal to get you in, obviously a system is made up of a condition indicator and a signal indicator. At the very, very, very least, you've got to have at least 2 things in a strategy. You should have 5 if you go and watch the video. You need something to monitor for those conditions. If it's a moving average cross that you enter on, you need a moving average cross dashboard. Otherwise, you've got to have all these charts open, and all that having charts open does is tempt you into trades that you shouldn't be taking because you see things that think, oh, that looks pretty good. I'll tell you what, if this thing bounces off of there, I'm going to take that. Why? Because it bounced off of that. What's your strategy? RSI extension. Why are you getting long then? You know this works. Proven it. Traded it for 5 years, Lee. Why would you do that? That works for 5 years. You've never seen this before. That's why. And if you think about it, if you take 5 trades that aren't part of your strategy because you see charts on a screen and they all fail, you've just lost 5% of your account. How long is it going to take you to get that 5% back with the strategies that you know work? It's just that today we haven't had any entries. Look at my P&L this morning, right? When I came onto this live stream, It was flat. There was no trades on there. Why? Because there was no trades on there. There was no trades. I couldn't take any trades because there weren't any. Or rather, the EA couldn't take the trades for me. So if there's no trades, there's no trades. Sit there and wait for the trades. Or pick another strategy that gets you into other trades, but make sure that that strategy, you are 100% convinced it works. I've fallen into the trap of having them all open. And somebody said to me, one of my mentors said to me, why do you need so many charts open? Just use one MT4. You can only look at one chart at a time. Oh, I can't. I can look at 28 charts at a time if I've got multiple monitors running. Yeah, but you can only look at one chart at a time. What he meant was I can only focus on one chart at a time. Yes, there might be 28 sitting all around me. I can only focus on one chart at a time. So why not focus on that one chart so you can see it all? Yeah, and then focus on the next chart. Then focus on the next chart. Do you need multiple MT4s and multiple monitors to do this? No point. I used to have another monitor up there. I used to have 6 monitors, right, in my old setup. This is all in the Telegram group. There's pictures of my setups. And my old one, I had 6 monitors. The monitor up there had the Trade Manager dashboard on it. The monitor up there had indices on it. The monitor up there had only trades I was in. So it was tiled to 6 or 8 charts, and they were the trades that I was in. So I could watch the trades that I was in. Watch them do nothing, waiting for them to do something. Yeah, what are you watching? You're watching this. How boring is this? What are you doing, love? Trading. What are you doing now? Still trading. I can't go to the loo because I'm trading. It's a myth. One monitor, one chart. That's all you need. Please, sir, when you're done, can you just go back to GJ? Yeah. When I'm done. When I'm done what? Being an idiot. Telling the truth. Yes, that's GJ. Right, so there you go. Prime example. Resistance bounce. You've missed it, though. Oh, I've missed it. Again, what's another big problem traders have? Fear of missing out. What is pound yen right now? A resistance bounce. It's a quadruple top. Rejection. Oh, it's coming down. Brilliant. You've missed the trade, though, haven't you? Oh, no, I haven't missed it. No, you have. You've missed it. It's gone. Oh, well, I'll just wait for it to get back there, then I'll go short. What, you're going to wait for it to get back in when it's going up? Yeah. Fear of missing out. Oh, I don't want to miss this. It could go all the way down to there. Yeah, it could also go all the way up to there. There's a 50-50 chance of it going in both of those directions. Why are you taking the trade? Because I've missed it. Fear of missing out. Another big reason. If you're watching charts all the time, that fear of missing out, you think, will disappear. What actually happens is it just over trades and overexposes you. Anyway, what do you want to look at, Tammy, on pound yen? So at the moment, we're in day 5 sideways. Bang in the middle of the range, bang in the middle of the RSI. Bang in the middle of nowhere. There's no reason for me to get into this at the moment. Support resistance traders, as you can see, are loading up short. How much of that is banks loading up short? I don't know. It's an uptrend. So you're selling against the trend. That's what the current situation is with the pound yen. And you're in a non-extended condition where the market could break high or low. That's all I can really say on that one. It's just, I'd want to be buying the pound. Sorry if I sound vague a lot of the time, but it is because hopefully it's sinking in that the reason I'm vague is because I have no clue which way the market's going. I've just developed a strategy that makes money regardless of what happens. So when you ask for analysis on stuff, I'll give you what it looks like. It looks like it's trending up. It looks like it's hitting resistance. So if you hit the button short, you need it to go counter trend. If you hit the button long, you need it to go with the trend. What the banks are going to do over the next few days, I haven't got a clue, because they haven't moved anywhere, have they? Look, Go and look at Bootcamp day one. What do the banks do? Accumulate positions to build a book. When the book has a balance net long or short, they will move the market in that way to profit from the move. What is the bank's book looking like at the moment? Is it long or short? Unless you know someone in the bank with the biggest amount of money to move the market, not just the bank, there's 10 of them who move this and they all have differing opinions and different book values. Unless you know which of those banks, first of all, has the biggest book, and secondly, which direction that book is going to go, you have a 50-50 chance of that trade working out in your favor from there. When the move starts and they pull it down to there, I will get a signal that they have done the move and are ready to take profit on their move. That is why my strategy works, because I know with more certainty after they've made a move where they're going next. At this point in time, I haven't got a clue what they want to do with it. So why take a trade? Because you're either going to go immediately into profit or immediately into drawdown. I'd much rather wait for an opportunity where I'm highly likely to get that move, because if they don't do that, they won't make money. Yeah. Does that help? Right. I'll leave it there again. FOMO is the ultimate account blower. Exactly. This is why dashboard. This is the whole reason. Sorry, I keep waffling on. I know people keep saying things which causes me to waffle, but the whole reason I built this, was to stop me FOMOing. Yeah. But what I used to do in the old days when I first started trading this strategy and I first started developing this strategy before I built these dashboards, what I used to do was every 4 hours, my Outlook calendar would go, pong, go and have a look at the 4-hour charts. And I'd be, oh, okay. Aussie dollar CAD. Are we extended? Yes. Aussie dollar Swiss. Are we extended? Nope. Aussie dollar yen. Are we extended? Nope. Aussie dollar New Zealand. Yeah. And that's what I would do every 4 hours. Literally takes me about a minute. I go like that. Any opportunities, anything extended? Yeah. Aussie dollar. Yeah. That is good. Any decent levels? Yeah. Pretty good. Okay. Let's drop down. Okay. We're just starting to roll over. Okay. I'll go short. Bang. That was my process. So I thought, why spend 2 minutes every 4 hours flicking through all these charts? Why don't I just build a dashboard that just goes ping, hey, we're extended. And I'll just look at those ones. And I was like, oh, that's a brilliant idea. Look, New Zealand dollar, US dollar. So this is it. It's good timing. This is the dashboard, right? So what do I need to look at right now? Euro New Zealand, pound odd, pound New Zealand CAD, New Zealand Swiss, New Zealand US. Bang, 6 charts. Let's start at the top. New Zealand dollar, US dollar. But this is now what my process changed to, was doing this now instead of every 4 hours having to look at everything. So I'm now looking at this going, brilliant. Opportunity for a long. I'll place some pending order. I'll place a pending order above that high and I would place my little pending order, and that's how I would trade. The dashboard cut my time down. Yeah. And then I thought, well, why should I do this? If I'm going to do this every time this pings at me, why don't I just build an EA that instead of me having to do this and then having to wait for that, why don't I just build an EA that when that condition is met and this condition is met, it does that for me automatically? That's where the market reverse alerts EA came from. Don't need anything more than that. And it gets rid of FOMO because the EA just takes the trades. I'm not involved. My involvement in trading now is monitoring a P&L. That's it. Everything else is just fully automated. And that P&L, if it ever gets into problems, I deal with it. If it doesn't get into problems, I just draw the money out. And that's what the banks do. Do you think the banks are sitting there analyzing charts in detail and going, oh, look, there's a trend line there. They're not even interested. They don't have charts. They look at price levels. That's it. And they look at this. What's your risk on this trade? Well, if it goes down to there, my risk is this. If it goes down to there, my risk is that. There's never a bank manager in the world that said, where's your stop loss? They say, what's your risk on the pound at the moment? I need to know my risk on the pound at the moment. Okay, I've got no exposure on the pound at the moment, boss. All right, brilliant. Dashboards. You don't need anything else. You need dashboards. You need to automate everything to the level of I can't be bothered to do anything, and I can sit here and play games all day long with the dashboard over there. And if something moves, my dashboard catches my attention because my P&L changes, and I'll have a look at the charts. Automate yourself. Automate what you do, and everything becomes easier. FOMO goes out the window. Yeah. Closing trades early goes out the window. Everything goes out the window when you don't get involved. Let EAs do it for you, and you don't have a problem. This is why I'm developing this strategy for the 5-minute pre-market opening range breakout. Because for me to fat finger it is hard work. For an EA just to take money out of the market because we know the strategy has an edge is easy. Why should I get involved? I'll get involved if there's a problem, but if there's not a problem, I won't get involved. What are your targets on the EU? Always propulsion gaps. So if you want to use, I don't use targets. My targets are percentages of average daily range. Yeah. So if I'm long, for example, there, my target will be half an ADR, which is 33 pips. So if I had taken that reversal alert, my exit would be there. However, if you're manually trading and you want to know where this is going to, look at the propulsion gaps. Yeah, and look at what normally happens to propulsion gaps. They normally get filled. This is, Euro US dollar is a little bit different at the moment because we've had an interest rate tank. So obviously it's left lots of targets to the upside. So where is this going? It's going back up to here and here, I would say, with 90% probability. Why? Because it's a 50% retracement. And there's decent sized propulsion targets. This might get orphaned. However, it might go up to there because the euro strengthens and the US dollar might default on its debts. Where do I think it's going? I haven't got a clue. However, I do know that price moves within its average daily range, and 58% of the time it stays within that. So if I pick a target within its average daily range, there's a high probability of hitting it. Got to try and free yourself from this. Where is price going? Forecasting the future. Everybody's trying to find the holy grail, right? That does this. There isn't one. I've been looking for it for 15 years, and either I'm a really crap Indiana Jones and I can't find it, or it doesn't exist, right? I don't know where EU is going. It's going up, or it's going to go down, and it's going to move through time today. That's the only three constants that are going to happen today with the euro US dollar. Apart from that, flip a coin. But if I had to be a betting man and you said I'm long on it, where's it going to go? I'd say that's probably a good target. However, if you're trading on the 4-hour time frame, that's not a good target, is it? Somewhere up there needs to be a good target. I don't know. Is it going to get up there? I've no idea. I really wish I knew, because I'd be a multi-billionaire and I certainly wouldn't be sitting here. How come I can't switch charts in MT5 with one click? You can. You just, on your market watch, you click, hold, drag, drop. Click, hold, drag, drop. Same, it works exactly the same in MT5. So do you let the EA take every trade that meets the criterias? I don't know. No. But you can do. Am I ever coming back? What do you mean, am I ever coming back? Have I gone somewhere? Oh, me. Sorry, I forgot. I've been talking all this time and I haven't been there. Sorry. I forgot I'd turned myself off. I turned myself off ages ago, didn't I? I've been sitting here talking to you. I've been sitting here talking into the camera and I haven't been there. Anyway, it's the sound that's important. Soak in the sound. So yeah, I don't take every trade. You can do. I'm after watching what's been going on here with these VPSs, because I set these VPSs up and these accounts up so that we could monitor every single entry. There hasn't been any really big squeezes at the moment. When these accounts get a big squeeze, they will get into some trouble. New Zealand dollar, for example. I mean, say that. Look, there's 5 entries long on the New Zealand dollar, and we're not sitting in any problem. We've banked at 0.8 today. And that thing's tanked to the bottom, isn't it? But if you reduce your risk, I have the two Pointing at monitors we couldn't see. Yeah, I was pointing at monitors all over the place, wasn't I? With the bootcamp, I teach the 2 exposure rule. So you get into 2 trades in one direction. And when you've got 2 trades on in one direction, you stop taking trades in that direction. You could, if you wanted to, hedge yourself the other way. So you could take a couple of long Swiss franc trades if you wanted to, because it doesn't matter which way the Swiss franc goes, you're going to make money. You just deal with the ones that don't. That's what position trading is. However, if you've got a bias, you'll probably want to just trade in one direction. And again, biases at the moment, if you look at the bias scorecard, a lot of the biases are range bound. A lot of them are range bound. And even the ones that are longs, this goes up to 14. We're sitting in 4s, 5s, and 6s. There's very little. And that's because of retail, basically. So you can drop 2 off or 1 off of those, and that brings them back into range again. So there's nothing particularly directional based at the moment. So you could take a trade on every single pair. You just have to reduce your risk. So the way that I manage it is I will put the EA on the charts when I see the setups. So I still use the dash in my day-to-day. I'm watching this. This is pinging alerts at me, right? And when I get extensions, I then go, right, I'm going to get some New Zealand long on. So I will look at what is the most extended, what are the best conditions, have we got confluence of levels coming up, and I'll do the analysis as I teach in the bootcamp, basically. So I'll look at it and go, right, all these New Zealands are extended. I need a couple on. New Zealand dollar CAD. Why is that a good opportunity? Because if we drop down to that monthly level, we're likely to get a bounce. That monthly level is only an ADR away. So if I get in there and I get in over 0.75 there, by the time it gets there and bounces, I should be out. Yeah. There'll be other New Zealands you'll look at and you'll think they're not quite as good. New Zealand Swiss, very good opportunity at the moment, because we're at a double bottom. Potentially, there's going to be a bounce straight away from there. So even if this comes down, there's a high probability people want to buy that level. If they don't, there and there. You'll look at other New Zealands and see that this is a strong buy because the yen is so weak at the moment. Really good opportunity, a 24 bounce. Yeah. So whiz through them and go, right, I like that one. So I'll stick the EA on New Zealand yen, or I'll flick the switch on the EA to go live on New Zealand yen and New Zealand Swiss. If I've missed the entry, I might take a manual. So I'll go, oh, I've missed the reverse alert on it. No problem. I'll hit a manual, right? But I'll still turn the EA on so that if this drops, the EA gets me into the additional positions. It's there to scale me into my positions. That's one of the reasons I built it. I take manual trades. The EA scales in for me, so I don't have to worry about watching and monitoring. If you want to trade every pair, no problem. Stick it on there. If you've got exposure 5 long on the New Zealand dollar, but your risk is 5 times smaller than recommended, your exposure is the same, isn't it? Yeah, if you're getting 1 long with 0.25, or you're getting 5 long with 0.05, your exposure is 0.25 long New Zealand dollar. So if you want to trade every pair and go with a simple life, do it, but reduce your risk. Yeah. Otherwise, you're going to massively overexpose yourself. And if the New Zealand dollar does, I use the earthquake example because New Zealand has had them. Auckland's had, Christchurch has had big earthquakes. If there's a massive earthquake in Christchurch and all the electricity goes down within the South Island or the North Island, whatever, the banking system breaks down. Yeah, the New Zealand dollar is going to tank massively. If you've got maximum risk on this, 5 positions, all with 0.25% risk, you are looking at 1.25% on half an ADR's movement to the downside, right? If this thing moves down 1 ADR, you're in 3% drawdown. If it moves down 2 ADR, you're in 6% drawdown on one currency pair. This is why exposure is an important thing. But I have no problem with getting into every single New Zealand dollar pair. Just don't get in with it full whack. Think about a normal trade. If everybody's been through a course at some point where they've said, we take a starter position. And if that starter position works, we add a second bit to it. Or if that starter position doesn't work, we add a second bit to it. Our stop loss is there. So we'll try here. If not, we'll try there and we'll stop out there. That's a kind of position trading strategy, but normally you only split it into 2 positions. If you're risking 1%, you take a 0.5 there and a 0.5 there. Yeah. You don't take a 1% there and a 1% there, because that risk then is 1.5. It's exactly the same with position trading. If you want to get into everything, do it. Just drop that risk down. Use your head. Use the back tester as well. And people just don't utilize the back testing facility enough in MT4. I get asked the same questions over and over again, and the answer is always quite often the same. Have you tested it in the back tester? No. Why? Why don't people want to do analysis and find out? To me, it's just like, first thing I do whenever I see anything is I want to see whether or not it's got an edge. If it hasn't got an edge, I chuck it away. So if you want to get into every pair, you run the same test on all New Zealand dollar pairs over the same period of time, and you amalgamate those results to find out what the drawdown would have been. Would it have been too much? Yes. Then what does your risk need to reduce to survive? That's what you get in with. Or you just don't get in with that much leverage. It's very simple. Well, I say it's simple. It's simple when you know, but I guess everybody's got a different learning curve, haven't they? Different point that they're in. So, okay, thanks. I thought it was some MT4 sorcery with switching charts. No, it's very. I'm not doing anything magic. I'm literally just clicking on the market watch, holding it down with my button, dragging it onto the chart, and releasing it. People don't know. People use all these, and I used to use all these fancy switchers. So you have, like down here, you have buttons for every instrument. Yeah, so you can click that and it flicks the charts over. And people don't realize that it's all built into MT4. All these extra indicators are built by people, I think, that don't know that you can do this. But why would you know? I don't think they teach this. So, always be learning. Oh, I've got a lot of risk on now. Look, there we go. So a lot of stuff starting to play out. Aussie dollar Swiss. That is not an ADR reversal. That's just an H1M5. Just had some EU news coming through. EU banks are said to sail through early round of stress tests. So there's no problem with the EU banking system. That's good. Right, I am going to leave it there now because I want to get on with some testing. I'll be back 2:20 this afternoon for the New York session. Back 7:50 tomorrow for Frankfurt. I'll be in the Telegram group if you need me. Links along the bottom. Yeah, and I will see you guys this afternoon. Have a good day.